Back. Welcome to the unique trading group presentation. I'm your boy UV the Great, and we are live. All right, listen. Today was a crazy day today. All right, I gave some guidance the night before, and I tell you, the market is surely resilient. And so what we got today was a little bit of rotation. Okay, we still have bearish structure here, lower lows, lower highs, but now we see we got that little bit of this grind to the top, right? Where we burst to the upside and pass some of those key levels. Now, I have a couple variations of some trades for tomorrow, and I want you guys to be prepared. So I got a couple scenarios that you could go by just in case different things happen. You want to have a wide view on a couple of techniques and a couple of strategies to use. And so what I want to bring to your attention is you see, anytime you have a huge move down, right, you have a two-legged pullback, and we are on the hourly time frame. I like to use the hour time frame or sometimes a tick chart to get the best entries and time the best entries. All right, but you want to get a broader look on the hour before you get your entries on the smaller. Okay, and I like to use the hour and the 4 hour. In this case, we're on an hour. So here we have a two-legged pullback, right? And we have a technical pattern where the bears try once and the bears try twice and they fail. And what we want to do is we want to go here and we want to use their stops as fuel. Okay, we want to use their stops as fuel. So right here, these are the stops of the bears, right? And what we want to do is we want to target those moments right here where gamma meets. The auction begins where the buyers and sellers agree, and we have burst over 21. And put your entry below here, your first bar below here, or put it at the halfway mark and move your stop up as it goes. And as you can see, we got that grind up today. All right, pop up in price, trap the bears with the W pattern, double bottom, a technical pattern. We burst above the 21 EMA, and we seen continuation right up to 583. Now be careful because we could see a bear trap coming in tomorrow. I'm sorry, a bull trap. We got a bear trap today, which I talked about in one of my earlier videos just before it happened, days before. And today, I want to bring to your attention that we could have a bull trap. Now, why do I say that? Because if you look close here, guys, this is a resistance level right here, okay? This area right here could be a technical way to trap in some of those bulls getting overly happy and overly anxious here, because we are at the top of a previous range. Okay, previous range would be at the 585 mark, which is a 50% auction level out of the 3% moves, 0, 50, and 100. And so what you want to do is you want to watch. Okay, now I want to say this: you don't want to pick tops. You don't want to get caught picking tops or picking bottoms. What you want to do is you want to use a technical trap pattern. Okay, now I'm going to show you this. I'm on an hour. We can go back in time already. You see here, all right, how price dropped, two-legged pullback. We went all the way back up where we retested the 21, but we rejected, and we fell all the way back down. Not only once, but twice. Okay, but sometimes when you get these moves, all right, like you see this parallel channel here, you want to catch the top. All right, you want to catch the top. Okay, and sometimes, as I like to say, is that third touch, that third test. Here's the first one, the second one, and the third test to reject off of the 21. Remember, if you're new to this channel, I want to remind you that I use the 21 SMA as my call trigger and my put trigger. I don't use a lot of indicators. We don't need a lot of indicators because we trade price action and market structure based around auction theory. Okay, so back to this bull trap. You see how price has rejected 1, 2, or 3 times? This entry here would be the perfect entry for puts. As you can see, we got that. All right, you see the same thing right here. All right, just like we had a two-legged pullback here. Now we have a two-legged pullback here with a push to the upside with a two try failure bear trap, right, that I talked about before. Run those stops, fuel up in price, move your stop up as you're in profit, and now we're up here again at a previous resistance level that we had here. Okay, so here's my parallel channel I created, and maybe we get that tomorrow, we don't know. But once the market opens, we will have a better view of where we could head. Okay, all right, so first, before we get any further, I want to hop over to the Forex Factory market to let you know we got some big data ahead of us tomorrow. We got the PPI early in the morning around 8:30, which means we could have a big move up or a big move down. You never know. That's why it's always good to secure profits. But one thing's for sure, it's going to be an exciting turn for the rest of the week. And of course, there's some more data. We are packed with data and packed with Fed speakers. So be aware. If you're in the Discord with me, you know usually I'm on time, hours, even now, before the market opens, with some insights. So stay tuned. Now, I want to show you guys these 4 indices real quickly before we move on. The MDY is the 400 SPY ETF Trust mid cap. All right, we have a little bullish continuation there. All right, I want to see participation from the broader markets. All right, there are 4 of them in particular: MDY, QQQ, IWM, and SPY. We went over SPY. We just seen the MDY. This is the QQQ here, which is really the NASDAQ, pretty much. All right, and we have a little bit of bullish continuation here. Still in the bearish overall trend, but we just have a little bit of squeeze going on. So really, really important to watch and monitor tomorrow when the market is open. Here's the IWM. The IWM is a small cap. I have a little bit of bearish divergence. It's not so strong as the other ones, but we are above the 21 EMA, and we do have micro bullish structure, short term, but over time we have bearish structure. Obviously, lower lows or highs. All right. Okay, and there's one more thing I want to bring to your attention. This here is the advance and decline line. All right, the ADD line. It is a market eternal. I discussed this in my book, The Power of Paytience, Mastering Emotions and Trading While Turning Discipline into Income, is a subtitle. But one of my chapters discuss market eternals, and I talk about the advance and decline line. Now, I'm not going to dive too deep into this video, as I don't want to hold you guys too long. But I do want you to realize that you can use the ADD line as a gauge for how strong the market is. All right, how strong the market is, and I'll go over some more of that in more detail in a later video. But as of now, I just want to put it on your radar so that you'll know. Okay, and guys, I want to take a brief moment away from the charts to go to the Trader's Creed. This is very important, and I want to start incorporating it in all my videos. And so what I'm going to do is I'm going to start from the top. I'm going to read this, and I want you to memorize this. Save it, screenshot it, whatever you need to do to remember it. All right, so starting from the top, the Trader's Creed. I am a consistent winner because I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. All right, so this is the Trader's Creed, and hope that you let this soak in. Take the time to go over to Discord, remember it, man, practice it, and try to memorize it, because later in your trading career and your trading journey, no matter intermediate, beginning, or advanced, these quotes will start to hit you more as you start to actually trade with more precision, using advanced orders and stop losses. You'll see a different side of trading outside of moving averages. All right, okay, so I'm going to finish with this last talk. I appreciate you guys taking this walk with me. Remember, tomorrow we could see some bear traps. All right, I'm sorry, some bull traps. We got that bear trap today, and it could get really spicy tomorrow. So just watch that level above at 585. All right, I'm in calls myself, so I will be taking profits tomorrow unless I am at the whim of the data release for the next day, which in turn will be another story. All right, so again, if you found this video valuable at all, don't hesitate to like and subscribe, share, leave a comment below, have some community engagement. I really appreciate you taking this walk with me. Again, my name is Juvi the Great, and I am brought to you by the Unique Trading Group. And I hope you guys have a blessed night. And until the next time, peace.